Good evening, everyone. Welcome to the official YouTube channel of Office Adda 24/7. So, first of all, let me know how are you all, and also let me know those candidates who have joined us here. Do let me know is audio, video both are okay? Are we good to go? And we are meeting after a long gap. I think 3 days gap is there. So let's start the session. As we have discussed that every day we will be talking about one particular unit of yours. So we have already completed the module A. So module A, all units have been done, and then module B's all units have been done. And if we talk about the basic questions and advanced questions, both we have done. So module A and B have been completed with the advanced questions practice and the basic questions practice. And today we will be starting with the module C. Okay. So today we will be starting with the module C, and as you know, the module C and D have a huge syllabus. It have a lot of chapters in it. So it will take a more time in comparison to A and B. So yes, before starting the module C, I would say to all of you, module A and B is a part of your Indian economy, and the module C and D is part of your Indian financial system. So if you haven't seen these two module sessions, do make sure you check the playlist on Office Adda 24/7 YouTube channel. You will find the playlist there and you can check the recording of these two modules. Okay. Now let's start with the module C, Indian financial system, and this is our first class of module C, you can see, and the topic we are going to talk about today is the Indian financial system overview. Okay, we are going to talk about the Indian financial system overview. So what is actually Indian financial system? So before moving towards the Indian financial system or moving forward to the session, let's first understand this topic, like a basic understanding of the chapter, and then we will move to the question and answer. Okay, so when it comes to the financial system, okay, when we talk about this, like what is financial system? Financial system is simply a system in which we exchange the funds. Okay, so a system in which we are able to exchange the fund, that is known as financial system, and we are exchanging the fund among whom? Among the person who has surplus of money and the person who have deficit of money. So when you exchange the money among these people, that is known as your financial system. Okay, now if we talk about the financial system, the exchange of money among the people who have surplus money and the people who have deficit of money, this system is known as financial system. But this exchange of funds among these people will be only done when we have certain financial component, like we need to have financial market, we need to have financial instruments, we need to have market participant. So there are three components of financial system, that is financial market, like money market, capital market, insurance market. Apart from that, we have your forex market, etc. Second, we need financial instrument, like all the financial product and services, shares, bond, debentures, derivatives, then you have insurance, then you have pension, you have mutual fund, you have your CASA RAFA accounts. These are the financial instruments. Third, you need a financial market. Under the financial market, you need a market participants. Market participants are the persons or the entities or the institutes who are actually participating in the system. Like we have banks, NBFCs, primary dealers, RBI, government, shareholder, investors like us, then primary dealers. Apart from that, we also have the portfolio manager. All these are the market participants. So by involving these three components of financial system, we are able to exchange the fund among the people who have surplus money and the people who have deficit of money. Okay, the persons who have surplus of money is the persons like us who have a savings account where we are depositing our money and we want to invest that money or we want to earn income on that money. So we are the person with surplus money. And the companies who are issuing shares, bond, debentures, or the government, in fact government is also one of the deficit of money party, because government, by issuing government security, raising the capital from the market. So anybody, if I am raising the money from the market by taking loan from the bank, that means I am the person with deficit of money. But if I am investing in any XYZ that company's share, then I am the person with surplus of money. So who is investing, who is giving money is the person with surplus of money, and who is taking money, who is raising money in any form, by taking loan or by issuing security, whatever form it is, that person or that institute will be a deficit of money party. So anybody can be the party of surplus money or the party of deficit of money, and when you exchange the fund among these party by using all these three components of yours, that is known as your financial system. Now the financial system have been divided into two parts. Broadly it is divided into two parts, that is formal financial system and informal financial system. So formal financial system means the financial system which follows the rules, regulations, restrictions, norms, etc. Like the banking system, like NBFC, like primary dealer, they all follow the norms of your regulator. So whatever institutions which comes under RBI, SEBI, Adda, PFRDA, all they are the part of formal financial system. But when it comes to the informal financial system, these are the financial system which do not actually follow any regulations, rules or anything. They are the institutions or they are the persons who do not have any legislation, who do not follow the norms of the government or any kind of regulator in the country. Like the money lenders. Like, okay, when you are taking money from the money lenders, the sahukars, we know them, and you are taking loan from your relatives, you are taking money from your friends. So these all are the informal financial system participant, because they do not have any regulator to tell them what to do and what not to do. Okay, so if summarize the whole chapter basic, first, financial system means the system where we exchange fund among the persons who have surplus money and the persons who have deficit of money. To exchange this fund, we need three components, that is financial market, financial instrument, and the third one is market participant. Apart from that, this financial system have been divided into two categories, that is formal financial system and the second one is informal financial system. Okay, I guess it is clear to all of you. Now let's move towards the question and answer session, in which we are discussing the questions on the same topic. So this is your module C, unit number 20, because module C starts from the unit number 20. And the first question is this: in which phase of development of the financial system was focus led on setting up of development financial institution? It was phase 1, phase 2, phase 3 or phase 4. In which phase? So you can see the financial system in our country have been developed in 4 phases, 1, 2, 3 and 4. Okay, so out of that you have to answer in which phase the development financial institution was set up. So when it comes to the development financial institution, these are the institutions which actually develop the particular sector of the country. Like we have NABARD, SIDBI, NHB, IFCI, we have EXIM, and the latest one we have NAFID. These are the all development financial institution. Okay, IDBI also used to be the development financial institution, but not anymore. It is the commercial bank now. Okay, so in which phase this development have been seen? In the phase 2. So the phase 2 of your development of financial system have been led to the development of the development financial institution. The reason behind it, because a lot of commercial bank used to be there, but they are not capable of fulfilling the long-term capital demand of the banks. They were not capable of giving funds for the infrastructure development, because the infrastructure needs large capital and for the long-term period, and it was not capable of doing that. And that's why the phase 2 have been introduced, that's the development financial institution. Right answer is B. Okay, now the second question is, which was the first bank to establish in India? The first bank to establish in India. Or this question can be asked in the such a sense, when did the formal financial system started in India? Hana? This can be asked. So this question can be asked in two ways. First, the first bank in India. Second, they can ask in such a way, when did the formal financial system started in India? And the answer is with the Bank of Hindustan. Okay, and it established in 1770. So the first Bank of India was Bank of Hindustan, whose headquarters was in Kolkata, but somehow this bank failed. So right answer will be your C. Okay, next question. Next we have, which of the following is our part of financial system? Which of the following are the part of financial system? So financial system is simply a system where we exchange fund among the persons who have surplus money and the persons who have deficit of money. Clear? So the financial market, financial instrument, financial institution, or all of the above. So I have told you that the financial system have what? It have three components. Okay, it have three components, and these three components cover financial market, financial instrument, financial institution. So right answer is your D. Financial institutions means simply your market participant. You can call them the market participant. They are the institutions who are participating in the financial system. So like we are saying, financial system is the system where we exchange the fund among the persons who have surplus money and the persons who have deficit of money. So when you exchange this fund, you need a mediator now. Let's say for example, I am the person with surplus of money and you are the person with deficit of money. How we are going to interact? How it's possible that I will be giving money to you, or I will be knowing that you are wanting money and you will be knowing that I have money I can give to you. So for that we need a mediator, and that mediators are the market participant, or you can call them the financial institution like the bank, NBFC, primary dealer, etc, etc. So the right answer will be here D. Okay, next question we have, which of the following is not part of the formal financial system? So which of the following is not a part of your formal financial system? Formal financial system means which is regulated by the regulatory bodies. Okay. So association, banks, NBFCs, insurance company. Which of the following is not a part? So see, banks are regulated by RBI. NBFCs also have to follow the RBI's rule. Insurance company have to go according to Adda. So right answer is A. Associations do not have any kind of regulatory body. So the right answer is A. That is associations. Next question. Next we have, which of the following is not part of the informal financial system? Not a part of informal financial system. The money lenders, the mutual fund, the relatives, the Mahajan. Not a part of formal, like money lenders are informal, relatives are informal, Mahajans are informal, but not the mutual fund. They comes under the SEBI, Securities and Exchange Board of India. So B is the correct answer. It's not a part of informal financial system. Okay, next question. Which of the following is a recommendation of Narsimhan Committee 1? So this is very important. In unit number 20, Indian financial system and overview, the definite one question can be seen is from your Narsimhan Committee. There are two recommendations given by this committee, first in 1992 and the second one was given in the 1998. So both are very important. These two, definitely one question will be seen from the Narsimhan Committee. Okay, so do read that very carefully. First is saying deregulation of interest rate, a phased reduction of SLR, then proper classification of assets and full disclosure of accounts of banks and financial institution, abolition of branch licensing policy. So what do you think? Which are the following recommendation given by Narsimhan Committee? Only one, only three, 2 and 5, all of the above. A, B, C or D? Okay, so right answer is all of the above. All of the above are the recommendation that the Narsimhan Committee 1 have given us. Okay, so the recommendation of Committee 1, Committee 2, both are very important for you. Now, next we have the question that is talking about Which of the following is a recommendation of Narsimhan Committee 1? Which of the following is the recommendation of Narsimhan Committee 1? Actually, one we have done, it will be which of the following is the recommendation of Narsimhan Committee 2. It's not 1, it is 2. Okay, and you have to answer which of the following is correct. Okay. So first is saying strengthening of banks in India. Second is narrow banking. Third is capital CAR, capital adequacy ratio, bank ownership, review of banking laws. So what do you think out of these 5, which of the following is the recommendation of Narsimhan Committee? 2, that is in 1998, and the right answer will be all of the above. All of the above are the recommendation of Narsimhan Committee 2. Okay, next. Next we have development of financial system in India is divided into which of the following phases. So next question we are asking about which of the following statement or the duration are correct for the development of financial system. First is pre-independence, post-independence, post-liberalization, post-global financial crisis. So independence happened in 47, okay. Then liberalization happened in 1991. Global financial crisis happened in 7 and 8. So the right answer will be all of the above. Pre-post independence and post liberalization, post globalization, global financial crisis, that is also known as Lehman collapse. Okay. So this is the 4 phases in which we have seen the development of financial system in India. So right answer will be your D. Okay, the right answer we have is D. Next question we have, which of the following are correct? Okay, which of the following is correct? You have to answer that. First is saying banking institution, they have given the definition of banking institution and non-banking institution. So the banking institution and depository institution. Second is non-banking institution and non-depository institution. First is saying this include banks and other credit unions which collect money from the public against interest provided to the deposits made and lend that money to ones in need. Okay, and this is what bank do na. Bank accept money, provide loan to the public, and on that bank also charge the interest. Now, non-banking institution, insurance, mutual fund and brokerage company fall under this category. They cannot ask for monetary deposit, but they can sell products to their customer. Product and services we can say. And the right answer is both. Both the definition about the banking institution and the non-banking institution, both are correct. So the right answer will be your C. Okay, right answer will be your C. Both are correct. Next question we have foreign institutional investor, that is FII. Foreign institutional investors, they comes under the SEBI, Securities and Exchange Board of India. So foreign institutional investors were permitted to invest in India in dash under the portfolio investment scheme, that is PIS scheme. So foreign institutional investors are those investors who are investing in foreign countries' company. Okay, so they are not investing in their own country's company. They are investing in foreign country's company to raise capital. Okay, to earn money. And which year this have been done? In 91, in 92, in 95, in 2000. So as we know, liberalization have been done in 1991. So our answer will be 1992. They are allowed to invest in India in 1992. Because in 1991, what happened? LPG. And because of this LPG, the rules, regulations have become easy. That means easy. And that made them that they can invest in India. So right answer is B. Okay, 1992. Good evening, everyone. Welcome to the official YouTube channel of Officers at 24/7. So before starting the session, first let me know is audio video both are okay. Are we good to go? So as you know, yesterday only we have started the module C, and in the module C we have discussed the first unit of module C, that was Indian financial system overview. So today we are going to talk about the second unit of your module C. In the second unit we have Indian banking structure that we are going to cover in today's session. If we talk about Indian economy, Indian financial system, we have 4 modules, 45 units are there. Out of the 45 units, only 19 units are there in the module A and B, and from 20th unit your module C starts. It means the module C and D have comparatively more syllabus in your IE IFS paper. Clear? So this is your module C, class number 2, and those candidates who are watching this session for the first time or who are actually starting preparation now for their JAIIB May 2024 paper, I would like to inform you all that we have already covered the module A and B in Achiever series. To check all those sessions, you have recording available on Officers at 24/7 YouTube channel in the playlist section. So go to the playlist section and check all the sessions recording available there for the module A. Okay, so we have started these session from your 4th of December. First we have done module A topic wise study, then we went through the advanced questions on module A, because it's very obvious by just reading the basic questions we will not be able to clear the paper. To clear the paper we have to practice the advanced questions, and that we have done for module A after completing all the 11 units basic questions. Then when it comes to the module B, first we have done the basic study of your all the topics or the basic questions we have done, and then we started with the advanced questions after that, and now we have started module C. Right now we are talking about the basic questions. When we complete all the topics with the basic question, we will be doing the advanced questions as well in the module C as okay. Okay, so this is all for this is the whole information about the series of your IE IFS, and this series going on Officers at 24/7 Monday to Saturday in the evening 7 p.m. for IE IFS. Same series is going on for PPB in the morning at 6 a.m. So to join these sessions, you just have to subscribe the channel Officers at 24/7. So let's start module number C, class number 2, unit number 21. That is Indian banking structure. That's what we are going to study today. Okay, so we are going to study the Indian banking structure. So as you know, every day, in every session, first we just discuss the topic and then we move forward to the MCQ. So let's start with the same pattern. So when it comes to the Indian banking structure, what is this actually? Indian banking structure started, or the banking structure started in India from 1770, and that's the year when the first Bank of India, or I can say the formal financial system in the country, was introduced, and that bank was Bank of Hindustan, established in 1770. This bank, later on, it failed to continue its function, but yes, this was the first bank which started banking system in India, or I can say it was the first bank which have introduced the formal financial system in the country. Now when it comes to the banking system or banking structure, the history of banking starts from the 1770. Then there are certain famous banks we have, like the Presidency Bank. We used to have 3 Presidency Bank. First was Bank of Calcutta. Its name have been changed in 1809 to Bank of Bengal. So first Presidency Bank was Bank of Bengal. Second was Bank of Bombay, and the third was Bank of Madras. These 3 Presidency banks have been amalgamated and they created the Imperial Bank of India in the year 1921. And later on, this Imperial Bank of India changed into what bank? It was changed into State Bank of India in 1955. So why State Bank of India is such a huge public sector bank, or a largest public sector bank in the country? Because it have merged a lot of banks with it. First 3 Presidency Bank merged, then Imperial Bank was created, then Imperial Bank converted to SBI, then the 8 associate banks of SBI was merged in the SBI, and the Bharatiya Mahila Bank, which was established in 2013, was also merged in SBI. And apart from that, a lot of banks have been merged in the SBI, and that's how SBI got the major customer base, the deposits, the business, everything. Okay, and that's the reason why State Bank of India is known as the largest public sector bank of the country. Correct. Now, if I talk about the other banks, the other thing is important in this chapter is nationalization. So first of all, what is nationalization? Nationalization simply means when the government of India purchased 51% or more than 51% shares of any private bank or any private entity. So let's say, for example, we have a private company. The 51% share of that private company or more than 51% share of the private company have been purchased by the government of the country. This process is known as nationalization. And when we talk about nationalization in India, the commercial bank got 2 times nationalization. The first nationalization happened in 1969, where only 14 banks, the 14 major commercial banks were nationalized. Why only 14 banks were nationalized? Because at that time we only had the criteria like 50 crore minimum deposit should be there with the bank. Only those banks will be nationalized by the government or will be purchased by the government, I can say. And in the year 1969, we have such kind of banks only 14. So 14 banks were nationalized. Second nationalization happened in 1980 and the 6 major commercial bank was nationalized at that time. Why only 6? Because there was a criteria of 200 crore public deposit and we had only 6 banks at that time who have 200 crore public deposit. And that's how total 20 banks were nationalized in the country. First time 14, second time 6. But right now, if you talk about how many nationalized banks in our country, we have only 11 nationalized banks. So where the other 9 banks goes, they have been merged with any other bank. So the first merger of nationalized bank happened in 1993 when the new Bank of India merged with Punjab National Bank. The second nationalization after 1993, the second merger of nationalized bank happened in 2019 when the Dena Bank and Vijaya Bank merged with the Bank of Baroda. And after that, the third merger of nationalized bank happened in 2020, where a lot of banks have been merged. First, the Punjab National Bank have been merged with your United Bank of India and your Oriental Bank of Commerce. Second, your Union Bank of India merged with Andhra Bank and Corporation Bank. Third, your Allahabad Bank merged with Indian Bank. Fourth, Syndicate Bank merged with Canara Bank. So these merger have been seen from 1993 to 2020, and after this merger we have only 11 nationalized banks in the country. Clear? So this is what the banking structure talks about. What are the types of banks? So first of all, when it comes to the types of bank, first we have a Central Bank of India, that is RBI. RBI divided banking system into 2 categories, that is scheduled banks and non-scheduled banks. Scheduled banks are those banks which are defined under the second schedule of RBI Act 1934. And the non-scheduled banks are those banks which are not defined under the second schedule of RBI Act. And there are 2 criteria. The first criteria the banks have to fulfill to come under the second schedule of RBI Act 1934 is first, to have minimum paid up capital of 5 lakh. And the second criteria is bank have to maintain the reserve ratio. Now, what is reserve ratio? The CRR and SLR of monetary policy. This is the criteria of scheduled bank. Okay. Now, the scheduled bank further divided into commercial bank, non-commercial bank and cooperative bank. Commercial bank further divided into public sector bank, private sector bank and foreign bank. Public sector bank further divided into SBI and nationalized bank. Then the cooperative bank further divided into primary credit society, district central cooperative bank and a state cooperative bank. If we talk about non-scheduled bank, they have local area banks and only 2 local area banks are there in India. Apart from that, the special category banks, or I can say differentiated banks are there, that is Payment Bank and Small Finance Bank, which introduced in 2015 by RBI for the purpose of financial inclusion. Apart from that, we also have a scheduled commercial bank, that is RRB, regional rural banks. So these are the total banks which are working in India, and that creates, all these banks creates the Indian banking structure. Okay, so I guess the basic understanding I have given to all of you. Now we are going to move forward and practice certain questions on the same knowledge. So the first question you have is, in terms of which section of Banking Regulation Act that was came in 1949 is the business of banking defined? So, acha, do remember when we are discussing question or we are practicing question, do not only focus on the question and option, also focus on the explanation I am giving. Okay, explanation is also important. Now, if we talk about here, Banking Regulation Act is introduced in 1949. Earlier it used to be known as Banking Companies Act. Okay, and what is the business of banking? Business of banking have three features, or I can say it have been defined in the three ways. The first, accept deposit from public. Second, for the purpose of what? For the purpose of what? Lending or investment. Okay, then the next one we have is the third one we have is that it will be repayable on demand and it will be withdrawable by using the right instrument like the demand draft, check, etc. Okay, so this is what the business of banking is. Business of banking says simply that banks, those institutions which accept deposit from public, use that deposit to provide loan or investment or to do investment in the market, and they are repaying that money to the customer when customer demands and make it withdrawable to the customer whenever he or she uses the instrument to withdraw their money. Okay, so this is the business of banking. It is defined under Banking Regulation Act 1949 in the section 5B. Okay, so section 5B actually talks about your business of banking. I guess this is understood. Business of banking. Achha, section 6 talks about the various forms of banking. Okay, like what are the other businesses or services banking can provide? That is defined under section 6. So the right answer for this question will be A. Section 5 talks about the business of banking. Clear? Now, next question we have, in which year Reserve Bank of India was established? So it's a very easy question, I know, and I guess everybody will be capable of answering this question, but with this we have to cover additional information about RBI. Like first, in 1926, Hilton Young Commission, that is also known as Royal Commission on Indian Currency, recommended that we should have a central bank of the country. The second, in 1928, it was rejected because it was not fulfilling the need of the country to regulate banking system, currency system, and the monetary policy. Then apart from that, in 1930, Central Bank Investigation Committee came. And after this committee's report in 1934, RBI Act was passed. And on 1st April 1935, RBI was established. So the central bank was established on 1st April 1935. But one more thing is there. When RBI was established, it used to be known as private shareholders bank. Why RBI used to be known as private shareholder bank? Because when RBI was created or established, we needed the initial capital 5 crores and the government did not have that capital, so government had borrowed that money from the public, and people like us have purchased the share of RBI, and that's why RBI used to be private shareholders bank. Okay, so what happened is that RBI is still a private shareholder bank? Obviously not, it's a government's bank. And how this happened? Because of the nationalization of RBI. So the nationalization of RBI have been done in 1949. On 1st January 1949. After this nationalization, RBI became government's bank. Okay, so the right answer will be C. But apart from this option, do remember all the explanation I have given here. Now, right answer is C. Second question, or I can say the next question. What is the minimum capital requirement is there to set up the universal bank? Now, first of all, we should know what is universal bank. Universal bank is the bank in which under one roof you are getting all kinds of services. You are getting commercial services, investment services, consultancy services, everything is there. Deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, insurance policies, in foreign investments, everything is available under one roof. That is your universal bank. Okay, and that's your universal banking. And to start universal banking, you need 500 crores initial capital, or I can say minimum capital requirement. Okay, like SBI, PNB, Axis Bank, ICICI Bank, all these are what? They are a type of universal banking. It's because they are providing all the services under one roof. Okay, so universal bank, public sector bank, private sector bank, they need 500 crore minimum capital to start their business. So right answer is C. Okay, next question. Foreign banks have three common modes by which they can operate overseas. These are by way of dash. So foreign banks are what? These are those banks which have their headquarter in foreign country, but they have in India only their branches. So those banks whose headquarter is in foreign country, but in India they have only their branches, those banks are known as foreign banks. Clear? Now, headquarter is in foreign currency, in India they have branches. So what are the ways by which foreign banks can come to India? By branches, by subsidiaries, by representative offices. Only one, only three, both 2 and 3, or all of the above. So what are the ways by which the foreign banks can come to India? And the answer for this question will be all of the above. The answer of this question will be what? It is all of the above. In all the these are the all common modes by which foreign banks can come to India. Okay, so right answer is D. Next question. What is the minimum capital requirement for setting up the small finance bank? So when it comes to the small finance bank, it's a type of differentiated bank. The payment bank, the small finance bank, they are known as differentiated bank. Differentiated banks means they have been introduced or they have been established with a certain purpose, with a certain objective. So the small finance bank, if we talk about, the minimum capital that is required here is your 200 crores. When it was introduced in 2015, it used to have initial or minimum capital requirement was 100 crore. That was same for the payment bank as well. So payment bank still have 100 crore requirement, but the small finance bank requirement have been increased from 100 crore to 200 crore. So the right answer will be B. Okay, next question. Next we have, what is the maximum balance that a payment bank can maintain in each account? The maximum balance payment bank can maintain in each account. 1 lakh, 2 lakh, 5 lakh, no limit. So payment banks are differentiated bank, introduced in 2015 only, and they can only provide CASA account, current account, savings account. RAFA is not allowed in the payment bank. And if we talk about when it was introduced in 2015, they were allowed to accept only 1 lakh deposit per customer. But this is increased by RBI. Now they are allowed to take up to 2 lakh rupees per customer. Okay, so this is the maximum limit. Not more than 2 lakh they can accept. So right answer is B. Remember, it used to be 1 lakh, but now it is 2 lakh. Next question. Match the following. So you can see one side you have the name of banks and the other side you have a name of year of establishment. Okay. So now start with the particular institution. Whenever you get the match the following question, start with the question, start from the option which you are 100% sure. Like I am 100% sure about what? About Imperial Bank of India, because Imperial Bank of India was created after amalgamating the 3 presidency bank in 1925. So I am very confirm about this. Apart from that, I am also very confirm about the first presidency bank. It was Bank of Bengal, introduced in 1806. When it was introduced, when it was established in 1806, it used to be known as Bank of Calcutta. But in 1809, its name changed to Bank of Bengal. But yes, the year was 1806. Apart from that, I also remember Bank of Madras. Bank of Madras is actually a presidency bank, and this is what? This is the 3rd presidency bank. So it have establishment year as 1843. Now let's match. The fifth is A, the fourth is B, the third is C. Okay, so you have to match in which of the following option these matches. So let's say third is C, third is A, okay, third is C here, third is D, third is C. It means either any B or D, out of B or D, one option will be correct. Now let's see, 4 is B and in the B option saying 4 is D, 4 is B. It means right answer is D. Because fifth is A, fourth is B, third is C, and you can see CBA. It means the Punjab National Bank is 1894 and the Indian Bank is 1907. So the right answer will be your D option. So this is how you have to answer the match the following question. Okay, so you do not have to go with each and every. Like if let's say for example, if I start with the first option or the first question here, that is Punjab National Bank. I know Punjab National Bank was established in 1894. Acha. One more thing, in your book, in the Macmillan book, this year have been given wrong. So do not get confused with it. In the Macmillan book, the year have been given 1874. But the right establishment year is 1894. Do not get confused. So first is E. Now you can see in the option, only D option have first is E. So now if you have matched this, you do not have to go for further. Okay, so always make sure you use the elimination method to answer the question. Now next question. Dash states no firm, individual or group of individuals shall, for the purpose of carrying on any business, use as part of its or his name any of words bank, banking or banking company. In which section it is defined? Section 7.2, section 7.1, section 6.2, section 5. So it cannot be section 5 because I have told you in the section 5 we have business of banking defined. That 3 works that we have discussed in the first question. Then if we talk about section 6, actually talks about the various forms of business. So this is not talking about various forms of business. So actually it can be option A or B, either A or B. And the right answer is option number A. It talks about your which company will be using the name banking company, banking or a banker. So right answer is section 7.2 states which firm or individual can use these words or which cannot. Okay, so right answer is A. Next question. Filling the blanks. It is asking in relation to concept of capital requirement under small finance bank. The minimum paid up equity capital for setting up a small finance bank was originally fixed at dash crore. Was. It means in 2015 it was fixed at what amount? And I have just told you earlier it used to be 100 crore. Not 200, not 300. So right answer will be 100 crore. It used to be 100. And this increased to what? 200 crore. So the right answer will be your B. Okay, right answer we have is B. I hope clear. Next. Which of the following banks are not accorded schedule status by RBI as matter of policy? So which bank is not a part of schedule bank? And what is schedule bank? Those bank which is defined under the second schedule of RBI Act 1934. Those banks are schedule bank. So public sector are scheduled, private sector are scheduled, but the district central cooperative bank, they have not got the permission, or I can say they have not got the status of schedule bank from Reserve Bank of India. So your right answer will be the C option. Okay, what is the right answer? Right answer we have is C. Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. So first of all, let me know how are you all. Let me know is audio video both are okay. So as you know, every day we are discussing about your IE IFS subject. So this is our class number 3 of IE IFS module C, and today we are going to talk about the topic Banking Regulation Act and RBI Act 1934. That's your unit 22 of module C. Okay, so when it comes to IE IFS module C, we know it's a very important module in context to the paper, because in the last papers we have seen in the key takeaways that the C and D module have been asked more in the paper. So the C and D is important for us. Now when it comes to the Banking Regulation Act and RBI Act, these are the act which actually regulates, or I can say these are the acts by which the banking system is running in the country. So when you talk about RBI Act, it was created to form RBI. When we talk about Banking Regulation Act, it was created for or to let the banks know what they have to do. Like act is what? Act is simply a number of provisions, number of norms, number of regulations that have to be followed by the banks or by the any entity whose act have been introduced. So now today, because I have a less time, so we will be let's move to the questions. Okay, so the first question in today's session is that is talking about when the Banking Regulation Act 1949 was made applicable to the cooperative banks. So this is a very common question, and it have been seen that this question have been asked in the paper earlier, like in which date we have allowed the Banking Regulation Act applicable to the cooperative bank. So we know cooperative banks actually work for the agriculture sector. When we talk about the cooperative banks, these are the banks which are working for the development of agriculture sector. They will be supervised by NABARD, and the cooperative bank used to come under the Cooperative Societies Act. But what happened? A lot of disruption have been seen in the functioning of cooperative banks. So the Banking Regulation Act made applicable to them. And also recently in 2022, the more supervisory and regulation authority have been transferred to RBI for the cooperative banks. And the reason behind was the banks was not working because they have a lot of regulations, like there is a overlapping of your jurisdiction, apart from that, because there are certain cooperative banks which works in the different states also. So multi-state cooperative banks are also there. Apart from that, when it comes to the cooperative bank, RBI and state government, they together regulate, supervise the operations of the cooperative banks. So because of multiple parties are involved, there was not a proper standard way by which the cooperative banks have to work. And the operations have been seen, and that's why more regulations and the more amendments has been done under the Banking Regulation Act. So it was done in the year 1966, March 1st. Okay, so the Banking Regulation Act was made applicable on the cooperative banks from 1st March 1966, and recently in 2022, one more amendment have been done after the case of Punjab and Maharashtra Cooperative Bank, PMC Bank. So next question we have, under which act is RBI empowered to be banker to the government? So RBI is the central bank of our country, and we know, we have studied that, and a lot of time we also discussed like RBI works as an agent for Government of India. So when RBI is working as an agent for Government of India, it means what? It means simply like RBI is somehow helping the government in the what we can call it, like in the management of accounts, like whatever reserves or have to be maintained of the government, that will be done by RBI. Revenue expenditure mismatch of Government of India will be managed by RBI. RBI gives loans to the Government of India as well as the state government. RBI also do the selling and purchasing of the government security. So RBI act as a agent for government, right? And this function or this power have been given to RBI under which of the following act? So the right answer is it is under RBI Act, because this is the function of RBI. And what RBI have to do, what are the functions of RBI? This is defined under the RBI Act 1934. So right answer is A. Next question. The Central Board of Directors of RBI is required to meet at least dash times in a year. So if you talk about Central Board of Directors, there are total 21 members. There are total 21 members in Central Board of RBI. Okay, out of which 1 will be the governor, 4 will be the deputy governor. Okay, 4 members will come from the local boards, and RBI have how many local boards? It have only 4 local boards. Okay, so 1 governor, 4 deputy governor, 4 members from local boards will be there. Then apart from that, you can see 2 members will come from Ministry of Finance. 10 members will be nominated by Government of India. Okay, so these are the 21 members, okay, under the Central Board of RBI, and these members have to meet at least 6 times in a year. Sorry, one second, let me erase this. Okay, so this is what we're talking about. Like if the Central Board of Directors, you are talking Central Board of Directors of RBI have to meet in a year. Like this is the minimum requirement that have been given. Like this is the duration for which they have to meet, and that will be your what? 6 times in a year. And it is minimum. This should happen. More than that can be done by the Central Board of Directors, but the at least minimum 6 times is required. So your right answer will be B. Okay. Next question. In which year the RBI was converted into public entity? In which year RBI was converted in public entity? Acha, one more thing. Okay. When RBI was established, it was the private shareholders bank, because another reason what? Because RBI was actually created with the initial capital of 5 crore. Okay, and this 5 crore capital was required to establish RBI, but the government of our country was not having that much amount of capital with it. So they have issued the share of RBI, and the public like us purchased the share of RBI, and that's why RBI was known as private shareholders bank. Okay, and the nationalization of RBI have been done in the year 1949. Right answer is 1949. 1st January 1949, the RBI nationalization have been done. Okay, now why I have written here the 48 year? Actually, in your book it have given. In your book it has given, like if we talk about RBI's nationalization, it happened on 1st January 1949. But in your book, the year have been given, or the answer have been given 48. That's a wrong answer. Okay, the true answer is your D option. That will be 1st January 1949. So RBI was converted into public entity in 1st January 1949. This is the change in your book. That's why I highlighted this. Okay, one more thing here I forgot to tell you here, that what happened if you talk about Central Board of Directors meeting in a year, at least how many times have to be done? It should be 4 times in a year. How many times? 4 times in a year. Okay, and in your book it have given 6 times. So do not get confused in this, because there are certain mistakes in the book. Like I have told you, Punjab National Bank's establishment year was given wrong in the book. Similarly. So the RBI, when which year did RBI commence its business? Like when RBI started its business? 37, 35, 27, 42 or 47. So RBI Act was passed in 1934. Okay, RBI Act was passed in 1934. So RBI was established in 1935. RBI was established in which year? It was established in 1935. 1st April 1935 is the date from when RBI started working. So your right answer will be B. Next question. According to section 8 and 9, the banks cannot engage themselves in carrying on which of the following activity? And this section we are talking about of which act? Your Banking Regulation Act. Because what bank can do, what bank cannot do, that is defined under the Banking Regulation Act. So Banking Regulation Act 1949 section 8 and 9 says that banks are not allowed to perform certain functions. Which of the following? First is saying no banking company shall directly or indirectly deal in the buying or selling of bartering of goods or engage in any trade. Second is saying no banking company shall buy or sell or barter goods for other. Third is saying no banking company shall hold any immovable property howsoever required for more than 7 years from acquisition thereof. Okay, however, it can hold any immovable property that is required for its own use. Okay, so out of these three functions, which cannot be performed by the bank? And the right answer for this question will be all of the above. None of them can be performed by the bank. Okay, all these activities banks are not allowed to perform. So the right answer will be all of the above. Right answer will be your all of the above. Okay, because all these activities banks are not allowed to perform. Next question. Which of the following statement are correct? This is about the RBI Act. So RBI Act 1934 have 5 chapters and 2 schedules. How many chapters are there? 5 chapters and only 2 schedules are there. So you have to answer out of these 5 chapters if these combinations are correct. First, preliminary. Second, incorporation, capital management and business. Third, central banking function. Fourth, general provision. Fifth, penalties. So RBI Act total have what? The 5 chapters and 2 schedules. And the answer is all of the above. All are correct here. Okay, because the right explanation have been given. Okay, so do remember this is important, like which chapters talks about which of the following, that you have to remember. Okay, next. The central government may remove from office the governor, a deputy governor or any other director or any other member of a local board. And it is defined under which act? It is defined under RBI Act, because we are talking about the central board of RBI. So in which section it is allowed to be done by the government? Section 12, Section 11, Section 13, Section 14. So under which section of RBI Act the central government have this authority to remove any member whenever government wants, because of the certain reason? Okay, so right answer is Section 11. Under Section 11, the government is allowed to remove the members of Central Board of RBI whenever it wants. So right answer is B. Next question we have, dash section talks about exemption of RBI from income tax and the super tax of RBI Act. It means it's talking about like which section of RBI Act says that RBI do not have to pay income tax or a super tax on the earning which RBI is having. And that's defined under which acts, which section? 36, 41, 48, 59. A, B, C or D? And the right answer for this is D, 48. Under section 48, it is defined that RBI do not have to pay the income tax or the super tax on the earnings. Next question. As I have told you that RBI Act 1934 have 5 schedules. Sorry, 5 chapters and 2 schedules, right? So out of the 2 schedules, the schedule 1 talks about what? Gives details of the organization of the country into 4 different territories for the purpose of RBI's operation. Okay, and which of the following is correct territory? First is saying western, second eastern, third northern, and fourth southern area. And the fifth one is saying all of the above. So out of these 5 options, what do you think which is correct? Like those territories that is defined under schedule 1 for the purpose of RBI's operation. And the right answer will be all of the above. Okay, right answer will be what? It is all of the above. Good evening, everyone. Welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay. Are we good to go? So in today's session, we are going to continue our series, that is Achiever series, and in Achiever series, we have started your module C of IEIFS, and also the C module have been started in the Achiever series of your PPB. So if you want to join these session, first of all, you have to subscribe the channel, and second, you have to join the session in the morning at 6 for PPB and in the evening at 7 p.m. for your IEIFS. Okay, so let's start session, and I guess earlier session you have already seen. If you haven't seen yet, then do check the playlist on Offices at 24/7 YouTube channel. You will find the playlist, recording is available. Do make sure you check all the recordings, because it is the high time that we have to be very consistent and we have to be very serious about our preparation. A lot of syllabus is there, a lot of concepts are there, and it will be good, like first if we cover the concepts so that we will have more time to revision as well, है ना? So this is our class number 4 of module C. As you know, particular module classes we are conducting. So this is your module C class number 4, in which we are going to talk about the unit number 23. So the class is your fourth class of module C, in which we are discussing unit number 23, because module C start from the unit number 20. So 20, 21, 22, and today we are going to discuss the 23rd unit of your module C. Sorry, overall it is module C, overall it is unit number 23. So this unit talks about the development financial institution. Now what actually the development financial institution is? So development financial institutions are those institutions which have been created by Reserve Bank of India. The reason behind introducing this institution was because at the time, commercial banks was not capable of providing funding for the infrastructure projects. So what happened for the infrastructure project, for the development of a particular sector, you need a large scale capital, as well as you need a long-term capital, which commercial bank was not capable at that time was providing this capital. So the need has been seen, like we need long-term capital, we need large-scale capital, then only we will be able to develop our infrastructure related to agriculture, rural area, housing sector, MSME, etc. And then the need of these institutions have been seen, and RBI initiated the establishment of these type of institution, that is development financial institution. So they work for the development of a particular sector. And when we talk about development financial institution, the example of DFIs are NABARD, SIDBI, Exim Bank, IFCI, NAFID, NHB. These are the development financial institution in our country. The first development financial institution is actually we can say established after independence in the year 1948. And that was IFCI, Indian Financial Corporation of India. IFCI was the first development financial institution, and if I talk about the latest development financial institution, that is your NAFID, National Bank for Financing Infrastructure Development. It was established in the year 2021. So the first and last, you have to remember the name. Apart from that, if I talk about development financial institution, all the development financial institutions, they are working for a specific purpose. Like if I talk about NABARD, we have NABARD, we have SIDBI, we have Exim Bank, we have NHB, we have IFCI, we have NAFID. So they all are working for a particular sector development. So you can see NABARD works for agriculture and rural development, SIDBI work for small industries, Exim Bank work for export import, NHB work for housing, IFCI work for industries, NAFID works for, one second, I forgot to add F. It is NAFID. Okay, it works for what? It is working for the infrastructure development. Okay, so you can see every development financial institution is trying to develop the particular sector of the economy, that is NABARD, SIDBI, Exim, NHB, and etc. And to make it possible that these sectors have proper capital, proper funding for the long-term period, and the large-scale capital will be available, all these are taken care by these development financial institutions, which obviously works under the RBI. All the financial institutions in the country works under the RBI, whether it is bank, whether it is non-banking financial institution, or you can say the DFIs. Okay, so this is what the basic of the topic is. Now let's move forward and discuss more about this topic in form of MCQ. Okay, and if you want to join these sessions on the regular basis, what you have to do, simply do make sure you check the session at 7 p.m. and at 6 a.m. Achha, apart from this, I also want to add one important information for all of you. That important information is this: I have started the resolution batch of yours. The resolution batch started from 10th of January actually. AFM subject have been started in this. Now, the second, if I talk about, from 13th of January, we have started PPB as well. So the PPB first orientation class happened till now only. Okay, tomorrow it means from 16th of January, I am starting module A. Now, why I am starting from module A? Because I keep saying to all of you, in PPB, in the PPB subject, you have major part of A and B module. But if come to the IE IFS, C and D have a major part. So accordingly, we start our batches. In IE IFS, we will start from C and D, and in the PPB, we start from A and B. So this is what we have here. So resolution batch, 10th January, AFM we are talking about, 13th January, PPB started. Tomorrow we are going to have the first conceptual class because it was just a orientation class. Okay, so the first class is starting from tomorrow. So if you haven't joined the batch, or if you want to check the demo session, you can check this class. It will be available free of cost on Officers at a 24/7 YouTube channel as well from 8 to 9 p.m. Okay, so you can check, and if you want to enroll, then today we have a discount of 80%. 80% discount is there, that will end tonight at 12 a.m. Okay, so this is the maximum discount. From tomorrow onwards, you will find this discount will be 78%. So right now, 80% discount is there on the resolution batch. If you want to enroll, you can enroll by using the code Y496. And do remember, tomorrow we have a first class that will be banker customer relationship class of your PPB. Okay, so this is the information for all of you. Now let's move forward to the first question and be active in the session. Keep answering the question, and if you have any doubt, you can ask in the comment section always. Okay, first, which was the first development financial institution that was set up in India? I have just told you the answer of this question. First and latest, I have given you the name of both. So IDBI, SIDBI, ICICI and IFCI. Acha, IDBI used to be Development Financial Institution, now it is a commercial bank. ICICI Bank used to be Development Financial Institution, it converted itself in universal banking. And ICICI Bank was the first bank which introduced the universal banking. Okay, so the right answer is obviously IFCI. With the capital of 10 crore, we have started the IFCI. In which year? In 1948, after independence, and that's the first development financial institution we have. Acha, one more thing, I also keep saying this, that you do not only have to focus on the question and option, also focus on the explanation I am giving. So maybe chances they will not ask the name of the first development financial institution. The question can be asking, what was the capital when IFCI was established? Or they can ask when the first development financial institution was established, that was IFCI. So 1948. So make sure, because you know conceptual study is very important, every detail is very important. So whatever explanation I am giving, do listen that very carefully. So right answer is D. Okay. Next question we have, which of the following development financial institution had a role of counseling NRIs for their investments in India? Which development financial institution do the counseling of NRI? NRI are non-resident Indians, those Indians who are living abroad for more than 182 days in a financial year. These are the persons who are known as the NRI. And which of the following institution is giving them the consultancy, advisory, or I can say counseling? ISCI, IDBI, ICICI, or Exim Bank? So right answer here is actually ICICI Bank. So ICICI Bank is the bank which started doing this role. It introduced the universal banking. Now what is universal banking? Acha, a question for all of you is that what is actually universal bank? Universal bank is simply when a particular bank is providing all kinds of activities under a single roof. the deposit, withdrawal, lending, check clearance, demand draft, locker facility. Apart from that, mutual fund, insurance, pension, government securities benefits, government schemes benefit, everything is available for you under a branch, under a single roof. That's the universal banking. Now the question for you is this: how much minimum capital is required to open universal bank? We have discussed this in the earlier classes. So this is the question for you. You have to answer in the comment section after the session ends. Okay. And if you are watching recording, do let me know in the comment section. So right answer is ICICI. So ICICI first time started universal banking in the country. So it started giving counseling to the NRIs as well. Okay. So right answer will be your C. Next question. Next we have, how much was the initial capital of IFCI? I have just told you, it is 10 crore. The initial capital of IFCI is 10 crore. Do remember that? This can be asked. Right answer is A. Next. With the onset of liberalization, what structure was adopted by the development financial institution? So you know, in 1991, when we have introduced the LPG policy, the liberalization have been done. When liberalization happened, a lot of policies, rules, regulations, restrictions have been removed from all the financial system, from all the sectors of the economy that have been done. So this also happened in the banking system. So the development financial system have adopted a new way of providing services. Which of the following is that? First is saying commercial bank, second is saying universal bank, third is saying mortgage bank, fourth is saying collateralized bank. So which of the following is true? So now you can simply use the elimination method. Always use the elimination method. Commercial banks were working from 1717. The first bank we got, Bank of Hindustan. So obviously it's not true. Now collateralized bank, mortgage bank, they actually are kind of not a type of banks. They are not a type of banks in the country. So right answer, we have a universal banks. NBFCs are also there. They are mortgage and collateralized, but not a type of bank. These two banks are. So the right answer is universal banks. So, and the first bank, the first development financial institution which adopted this or which started this universal banking was ICICI. I have told you already. Next question. Which of the following would come under the category of an investing institution? So you have to answer, like, out of these four, which of the following is a part of your investing institution? LIC, ICICI, Axim Bank or NABARD? Which of the following is the investing institution? A, B, C or D? Okay. So the right answer is LIC and UTI, Unit Trust of India. They both are counted as a investing institution. Okay, so development financial institution are actually divided into four categories. Out of those four categories, the one category is investing institution. And in investing institution, we only have LIC and UTI. Okay, do remember that. So right answer will be your A, that is LIC. Okay, next question. Next, it is talking about which of the following objectives are true of development banks. Development banks are what? Simply a development financial institution like NABARD, SIDBI. They are also known as development bank. You can call them non-commercial bank. You can call them all India financial institution. All are correct names for your development banks. Okay. First, to serve as an agent of development in various sectors like industry, agriculture, international trade. Second, to accelerate the growth of economy. Third, to allocate resources to high priority area. Fourth, to foster public-private partnership. Fifth, to develop entrepreneurial skills. Sixth, to promote the development of the rural areas. So, which of the following objective are true of development banks? A, B, C or D? Let me know. A, B, C or D? And the right answer is all of the above. All of these are the objective of development financial. They actually promote development of rural area. They promote the entrepreneurial skills. They foster the public-private partnership. Public-private partnership means where the government and private sector, they both are working together. They both finance the project. Like the infrastructure projects, government and private sector both are working together. Now to accelerate the growth of economy. They also serve as an agent for the development of different sectors like industries there. SIDBI and IFCI is working for this. For agriculture, NABARD is working. International trade, your ICICI is working right now. So these are what? Right answer is all of the above. All are the objectives of your development banks. Okay, next question. In 1976, the soft loan scheme introduced to provide financial assistance to product units in selected industries like cement, cotton, textile, jute, sugar, certain engineering industries for modernization. So this scheme was launched by which of the development financial institution? IFCI, SIDBI, IDBR all together. Let me know. So soft loan scheme have been introduced for the different sectors or the industries, I can say. For what purpose? For modernization of these industries. So which bank or which financial institution have launched this scheme? Achha, apart from that, as it says soft loan scheme, we also have soft loan window. When it comes to the soft loan window, the soft loan window is IDA, International Development Association of World Bank. So World Bank have 5 institutions. This we have discussed in module A classes already. Okay. So do remember, if you talk about soft loan window, IDA is a soft loan window and the soft loan scheme was introduced by IDBI. Industrial Development Bank of India. It used to be the development financial institution when it was established in 1964. Then it converted in commercial bank in 2005. It was the public sector bank then. In 2019, it is still a commercial bank, but now it became a private sector bank because LIC has purchased 51% shares of IDBI in 2019. Okay, so this is how the administration, or I can say the ownership of the IDBI have been changed. So right answer here is C option, that is IDBI, Industrial Development Bank of India. In 1976, it introduced the soft loan scheme. Now, the functions of SIDBI can be classified as under. So SIDBI is what? Small Industries Development Bank of India. It focuses on the development of the small industries like MSME. It promotes the MSME. It provides direct and indirect finance to the MSME sector. It refinances loans that are extended by the primary lending institution to the MSME units. It discount and rediscount the bills. It also helps in expanding marketing channel for the product of MSME sector, both in the domestic as well as international market. Then it offers services like factoring, leasing to the industrial concern in the MSME sector. So now you have to answer which of the following is the function of SIDBI. Only 2 and 3, only 4, only 5, all of the above. So SIDBI actually works for the MSME, na? It discount and rediscount the bills for the MSME. It also helps in expanding the marketing channel for the products of MSME sector. It offers the services like factoring, leasing, obviously to the MSME sector. It do provide the direct and indirect finance to the MSME sector. So it means the right answer will be all of the above. All of these services are provided by SIDBI for the micro, small, medium enterprises. Clear? So right answer here is D, all of the above. Right answer we have is D, all of the above. Next question. Which of the following is correct about financing opportunities offered by SIDBI? So which of the following financing opportunities is offered by SIDBI? The direct finance, indirect finance, microfinance, or all of the above? So microfinance, I guess you all know. Direct finance means it is directly providing to the public. Indirect, obviously, some intermediate will be there. Okay, and there are certain types of funding way that should be used. And microfinance, you know, that is provided to the low income group or poor families, poor household. That's your microfinance. And all these services are provided by SIDBI. So your right answer will be all of the above. All are the financing opportunities offered by the SIDBI. Clear? Next. Which of the following is our products and services offered by Exim Bank? So Exim Bank is Export-Import Bank of India. Exim Banks actually works for promoting the foreign trade in the country. So it provides various financial products and services to promote the foreign trade, which includes buyer's credit, line of credit, corporate banking, overseas investment finance, export advisory services, or all of the above. So which of the following is the products and services offered by Exim Bank to make the foreign trade grow in the country? A, B, C, or D? Which of the following is correct? And the right answer is all of the above. Export advisories, it is a service of Exim Bank. The first and second is the products that it offers. Okay, when it comes to the services, the third statement is services. First two are the products of the Exim Bank. Right answer will be all of the above. Good evening everyone, welcome to the official YouTube channel of Officer Saturday 24/7. So first of all, let me know how are you all, and also let me know as audio video both are okay, are we good to go? So as you know, every day in this Achiever series, we are discussing one particular unit of your IFS for your module C. So we have completed module A, then we have completed module B, and we have started module C, and this is our class number 5 of module C. It means already 5 units of module C we have completed, and we are going to move forward with the same number. So today it's the 5th class, and the topic of today is microfinance institution. That is your unit number 24 of module C. If I'm talking about module C, it's simply one of the most important module of your IFS subject, because C and D modules have major part of your syllabus. That's why maximum questions can be seen from these two modules. Acha, before moving forward to the questions, first I want to inform you all that we have already started the resolution batch. The resolution batch I have started from 13th of January. So on 13th of January, I have taken orientation class. And the orientation of PPB I have taken on 13th of January. So today it's 16th of January, and today I will be starting the topic wise study in the batch. That I am starting from your module A, unit number 1, and the unit number 1 of your module A is banker customer relationship. So today I will be starting your new subject, that is PPB, from banker customer relationship, and the time of this batch is 8 to 9 p.m. So if you want to check the demo and then you want to decide like you want to enroll in the batch or not, then do check the demo only on Officers at 24/7, 8 to 9 p.m. Apart from that, if you are regularly following my sessions on YouTube, you know how I teach, you know if you are able to connect with my teaching way or not, and then you want a particular batch of mine, then you can enroll in this batch starting from today. It's better if you start live from the very first day, because if you think about like I will watch the recording is available, somehow it got delayed, and that kind of concentration or that kind of impact that live class gives us, that's very important, because somehow you be very active in the live class, because what the mentor is saying, what the other are asking, all the things you are always make sure you understand that, and that's give you the more activeness in the session. So if you want to join the PPB batch starting from today, that is 16th of January, 8 to 9 p.m. Apart from that, in the same batch, in the same resolution batch, I am starting IE and IFS. So this IE and IFS is starting from your 6th of February in the same batch. Okay, so if you want to enroll, you can enroll, and already AFM started in this batch. AFM started on 13th, we have started PPB. On 6th Feb, I will be starting IEIFS. After that, you will start your retail banking as well. So these are the batches. Acha, to enroll in the batch, that's the resolution batch. You can use your code Y496, you will get maximum discount. Okay, apart how to enroll, I will let you know in the end of the session. Now let's move forward to the microfinance institution. Microfinance institution have to be introduced by RBI to make sure that the low income population or the low income household, the poor income household will be able to get the financial product and services. So simply microfinance institutions helped RBI in achieving the financial inclusion. So microfinance, when we talk about microfinance, what is microfinance? Microfinance is simply a process, or microfinance is the combination of your micro savings, micro insurance, micro pension, micro investment, micro credit. All these are the part of your microfinance. So when you provide all these kind of service, micro savings, micro pension, micro insurance, micro credit facility to poor and low income household. What is the meaning of poor and low income household? It means those people whose household annual income is up to 3 lakh in one financial year. So annual household income should be up to 3 lakh, not more than that. And when it comes to the household, what is the meaning of household? Household means the person, the husband and wife and their unmarried children. They are the part of household, or you can call it as a family. And if they have annual income up to 3 lakh, that is known as your poor and low income families. Okay, and they are allowed to get the loan under the microfinance institutions. So these are the institutions helping to provide the financial services to the last person who belongs to the low income population, or we can say low income households. Okay, so let's just start with the question. The first question is talking about here, which of the following figures in the fair practice code developed by RBI for NBFC MFIs? So when it comes to the NBFC MFI, this is the type of MFIs. MFI have 3 types. Out of that, one type is NBFC MFI. So non-banking financial companies, microfinance institution is a type of type of MFIs. And these are the only type of MFI which are regulated by RBI. Okay, they are regulated by whom? By RBI. Non-bank financial companies, microfinance institution, and these NBFC MFIs are for-profit MFIs. The other name of this is for-profit MFIs, you can call it. So what are the fair practice code? First, there should be a board approved loan application format. No security deposit should be taken from the borrower. A borrower should not be a member of more than one self-help group or all of the above. So as we know, this is regulated by RBI. So RBI has given certain codes, like a fair practice code you are calling it, or you can call it simply the code of conduct that RBI has given to the NBFC MFI. Like this is how they have to work. This is the conditions, or these are the regulations that they have to follow when they are providing services. Okay, so what are these conditions? Out of these 4, so right answer will be all of the above are the fair practice code that is given by Reserve Bank of India to the NBFC MFIs. And they are what? They are regulated by RBI. The other name of them is for-profit microfinance institutions. Clear? Next question. Always make sure you focus on explanation as well. Okay, because explanation is also important. Whatever explanation of topic I am giving here, the questions can be asked from there also. So make sure you understand, you focus on the explanation also. In which type of financing self-help group does an NGO act as financial intermediary? So if we talk about self-help group have 3 models. First of all, self-help group is the group of 10 to 20 people. It is the group of what? It is the group of 10 to 20 people. These are the 10 to 20 people who create a group for the purpose of savings habit. So the main objective of opening self-help group was to promote the savings habit among the persons. So these are the 10 to 20 persons who come together and collect certain amount of money every month and use that money to give as a credit to the other person of the member of the self-help group members. Whoever needs money, they can take money from there. So that's the first reason why self-help group was introduced, to promote the savings habit. But now they are also linked with the banks. Self-help group bank linkage program was introduced by NABARD in 1992. Okay, and it allowed that self-help groups can be linked to the banks, and on that they are allowed to take a loan from the bank. Okay, so self-help group have 3 models. The first model, model 1, model 2, model 3. Model 4 is not a model in self-help group. And NGOs are the part of model 2 and 3 only. Okay, in model 2, they work as a financing agency. Okay, or in the model 3, they work as a financial intermediaries. So the right answer will be your C. Okay, right answer will be your C. Next question. It is talking about which of the following types of microfinance institutions are regulated by RBI. Which of the following types of microfinance institutions are regulated by RBI? I have just given you the answer. If we talk about the types of microfinance institution, first not for profit, second mutual benefit, third NBFC MFI, they are also known as for profit. The other name of them is for profit MFIs. Okay, out of these three, they all are the type of MFIs. Now you have to answer out of these three, RBI regulate which type of microfinance institution, first, second, third, or all? And the right answer is NBFC MFIs. This is the type of microfinance institution type that RBI regulates. So right answer will be your C. Okay, next question. The Grameen Bank model was developed in which country? So Grameen Bank model have been introduced by Mr. Muhammad Yunus. He was professor, and when he was going from Bangladesh, he saw that there are some money lenders who actually providing loan to the public, but they are taking a lot of interest from them. Hana, for a single day or for a week or for whatever the duration, they are charging very high rate of interest. So he did what? He have given a certain amount of money to the people in the Bangladesh, the Jobra district that we are talking about, and he saw that persons have returned the loan on the time. Hana, without interest, he have given the loan. So this without interest loan criteria, not the criteria but the function of a bank, is started by Mr. Muhammad Yunus in the country that is Bangladesh. Okay, and it have been seen, it was started from Bangladesh one district and it have been increased or it have been expanded, and the 99% return rate is there on the loans. Without interest they are taking loan, without collateral they are taking loan, but 99% loans comes back. And this is the big success of your Grameen Bank model. Okay, so the right answer is D. Right answer will be D. So lead bank scheme was introduced by RBI for the purpose of financial inclusion. In the lead bank scheme, RBI did what? RBI first make a public sector bank or a private sector bank the lead bank of a particular district, and in that particular district the lead bank have to make sure that the credit planning and branch expansion will go properly. That's the objective of your lead bank scheme, and it was introduced in December 1969 by Reserve Bank of India. So the right answer you have is B. December 1969, RBI introduced the lead bank scheme in the country for the purpose of financial inclusion by making a particular bank lead bank of a district, and that bank will be doing what? That bank will be making sure that the branch planning and credit planning will be done properly. Okay, so right answer is B. Next question. Next question, you can see it is talking about the model of self-help group. So I have told you there are three model of self-help group. 1 second. There are three models of self-help group, model 1, model 2 and model 3. Now you have to tell out of this three models which model is true. First is saying model 1, NABARD bank and self-help group, no intervention of NGO is there, and this model is self-help group are formed and directly financed by the bank. So self-help group directly can take a loan from the bank. That's the model 1. Second, here there is no NGO intervention. Second is NABARD bank and self-help group. So under this model, NGOs will promote self-help group and link them with the banks, and they work as a financing agency here. Now model 3, NABARD bank, NGO, self-help group with NGO as a financial intermediary, and the answer is all of the above correct. In model 1 there will be no NGO. Model 2 and 3 will have NGO. Model 3 will be using NGO as a financial intermediary. So bank will give loan to NGO, NGO will give loan to self-help group. Okay, now second is model 2, NGO will be here financing agency. So they will promote the self-help group. NGO will promote the self-help group, but the loan will be given from bank to self-help group. Okay, no mediator will be there in the NGO. So right answer is D. All are the right explanation of module D. 10 मिनट और है. आपकी कब से है? 5:30. Clear? So right answer will be your D option. That is all of the above are correct. Okay. Now let's move to the next question. Which of the following are correct about the categories of microfinance institution? So I have told you there are three categories of microfinance institution. Out of these three, which of the following is true? Mutual fund, mutual benefit MFIs, not for profit MFIs, for profit MFIs, and all of the above. So what do you think? Which of the following is the right categories of microfinance institution? So you can call for profit MFIs, you can call them NBFC MFI as well. Okay, and all these are the categories of your microfinance institution. That is the D option. Right answer will be your D option. All are correct. All are the categories of microfinance institution. Okay, now this is our next question that is talking about the JLG. First of all, let me know what is the full form of JLG. Okay, so what is the full form of JLG? These are the joint liability groups. Hana? These are what? They are joint liability groups. So question is asking about the joint liability group. Okay, which of the following are correct about the joint liability group? Okay, so first statement is saying a group of 4 to 10 people of same village locality of homogeneous nature and same socio-economic background will be the member of joint liability group. Is it true? Yes, actually it is true. In the self-help group, you will find 10 to 20 people will be there, but in the joint liability group, you will have 4 to 10 people. Now, the joint liability group formed of such members may also be provided with the adequate credit support by the banks. So, in this session only I have told you that the self-help group have been created for the purpose of savings habit. Like we wanted to create a savings habit, or we wanted to promote the savings habit among the persons. That's why we have introduced the self-help group. Now, the joint liability group was introduced for the major purpose of credit requirement, to fulfill their credit need. That's the major reason of joint liability group. It means both the statements are correct about your joint liability group. Okay, so the basic difference between self-help group and joint liability group is self-help group you will find 10 to 20 people. In joint liability group you will find 4 to 10 people. In self-help group, the objective of introducing self-help group was to promote the savings, and in the joint liability group objective was to provide or to fulfill the credit requirement of the group. So the right answer is C, that both are correct statement about the joint liability group. So your right answer will be C. Okay. Now, next question is talking about which of the following is not correct about the lead bank scheme. Which of the following is not correct about the lead bank scheme. So we have just discussed in December 1969, RBI have introduced the lead bank scheme. It means the first statement is very much true, because it is saying the lead bank scheme was introduced by RBI in December 1969, that we have seen. Second is saying the process of district credit plans and coordination among different financial intermediaries, that's the work of lead bank scheme. Third is saying it was recommended by YH Malikam study group. So out of these three, which of the following is not correct? Incorrect statement you have to find out. So first is correct statement, that we know, it means it cannot be C. Okay. Now, the lead bank scheme was introduced by RBI in 1969 for the purpose of financial inclusion, in which what RBI was doing, RBI was making a particular bank, either a public sector or private sector bank, a lead bank of a district. And what they have to do in that particular district, they have to do the branch planning, they have to do the credit planning. And that was the objective of introducing the lead banks. And it means the second statement is also true. But when it comes to the recommendation of lead bank scheme was given by YH Malikam, this is not true. The right study group was Godgill study group. The Godgill study group was incorrect statement about lead bank scheme. So do remember, lead bank scheme introduced by RBI on the recommendation of Godgill study group in the year 1969, which was doing in which RBI was making lead bank to either a public sector or private sector bank. One lead bank, one district will have one lead bank, and they have to do the credit planning and branch planning in that particular district. Okay, so right answer here is B, that is only third is incorrect. Next question we have here. The main purpose of Fair Practice Code is to. Why RBI introduced the Fair Practice Code? What is the reason? Like why this Fair Practice Code is what's important for the regulation? First of all, in the PPB, you study the ethics. In the ethics, that's a term, that is code of conduct. You can call it a rule book. You can call it the rules, regulation, norms that have been given by the company that you have to follow. So company, whenever you join an office, whenever you join a job in any organization, they give you the ethical code of conduct. Or I can say that they have given you the rules, regulations, or the way you have to behave in the organization, or the way you have to work in the organization. That's the code of conduct, right? And that's what the Fair Practice Code is also. Like if you are dealing in this business, if you are dealing in this market, you have to do the fair trade. No illegal work, no fraud should be done. And that's why RBI gives the Fair Practice Code. So which of the following was the main purpose? First, to adopt practices which are considered best for dealing with the customer. Second is ensure customer satisfaction by setting higher standard and achieving them. Third, provide business related information to the public which is in the interest, in their interest, in the public's interest. Avoid using unfair practices. So only two, only one, all except 2 and 3, or all of the above. Out of these 4, what do you think, as per you, what are the reasons, what are the main purpose of introducing the Fair Practice Code? And the answer of this question will be all of the above. All of the above are the main purpose because of which RBI introduced the Fair Practice Code, or RBI gives the Fair Practice Code. Okay, because it helps the RBI to do what? To maintain the right working environment for the employees as well as for the customers. Okay, so no unfair trade practices should be done anywhere. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know is audio and video both are okay, are we good to go? So today we will be covering this particular session in form of PPT only. Okay, so let's start the session. Those who have joined this session for the first time and those who are join or watching the Officers Adda 24/7 YouTube channel for the first time, I would like to inform you all that this is the channel which will answer all your query regarding your JAIIB, CIB, bank promotion exams. Apart from that, this series, this Achiever series is related to your JAIIB May 2024. So this series is definitely going to help you in your preparation for JAIIB 2024. Apart from that, if I talk about the Achiever series, in the evening we are having IFS session, in the morning we are having PPB session. So in this session, what actually we are doing, as you can see, this is the class number C, module C. Okay, this is the class number 7 of module C. So we have started from the module A. Module A sessions we have done first with the basic questions, and then we have done the advanced question. Then module B, we have talked about the basic of your that we can call it, we have started the basic questions of module B, and then we have done the advanced question of module B, and now we are doing basic questions on the module C, and then after completing all the units we will do some advanced question on the same module C of yours. Okay, so this is the series in which you will be knowing all the syllabus of your JAIIB, all 4 subjects. This is going for all the 4 subjects of your JAIIB. Okay, if you want to regular join these session for IEIFS, you have to join in the evening at 7 p.m. and for PPB you have to join the session in the morning at 6 a.m. Okay, now let's move forward and start our session. So today's topic will be your insurance company. This is your unit number 26 of module C. Okay, so if I talk about insurance company, every day we are discussing certain important questions on the particular unit of your modules, and before moving forward towards the important question, first we will have understanding of this particular topic, like basic understanding what this topic is talking about. So first of all, when it comes to your insurance company, who regulates the insurance company? IRDA regulates the insurance company. Okay, insurance company regulated by whom? It is regulated by IRDA. So what is IRDA? It is Insurance Regulatory and Development Authority of India. It was established on the recommendation of your R.N. Malhotra committee. So R.N. Malhotra committee has given the recommendation to have a certain regulatory body for the purpose of insurance sector's growth, for the purpose of the regulation of the insurance sector. So the ADA was created after that, after the recommendation of the ADA committee, sorry, RL Malhotra committee, ADA was established. If we talk about insurance companies, we have life insurance company, we have general insurance company, we have reinsurance companies, we have standalone companies also. All these are the insurance companies we have. Okay, and all are regulated by the IRDA. Apart from that, the insurance companies, after the liberalization policy like LPG policy that was introduced in 1991, after the LPG policy, we have seen that in India, we started introducing the privatization or in the insurance market. It means we started allowing private companies to work in India, or their private companies are working in India now. So the competition have been increased, and after liberalization it has also seen that now we have to introduce the more and more reforms in the insurance market, because the liberalization have somehow given a right approach, or I can say the liberalization has given a right strategy or the sound decisions to be made in the financial sector, and same we wanted to do in the insurance sector. And that's where after liberalization a lot of reforms have been introduced, and on the recommendation of Narsimhan committee, we allowed the insurance companies to introduce or to participate from to introduce the participation from the private sector in the economy. So now the private insurance companies are also there, public insurance companies are always there, and they all works under the regulation of IRDA. Okay, now let's start with the first question, that is talking about what extent up to which FDI is presently permitted in the insurance sector. So what is FDI? FDI stands for foreign direct investment. Foreign direct investment is simply means that it's the investment that will be done by the foreign country's investment. So foreign direct investment is simply a kind of investment that will be done by the foreign company in India. Okay, let's say when we talk about the foreign company invested in India for the purpose of growth and expanding their business, having more better business, having brand image, that's the foreign direct investment. Okay, so foreign direct investment simply means when the company of other country invest in the other country's companies, that is the foreign direct investment. And in case of FDI, 74% FDI is allowed in the insurance market. How much? 74% FDI have been allowed in the insurance market. So simply do remember, FDI is allowed in insurance market, that is 74%. Actually in 2000 year, the FDI was started in the insurance market, that used to be 26% only. Then it was increased from 2000, it was 2000 year. Then in 2005, it was increased to 49%. And after that, in 2019, it was increased to 74%. Since then, we have 74% FDI allowed in the insurance market. Okay, so right answer is C option. Next question. The first insurance company to be established in India. So do remember, like we know in the banking sector, we have studied the first bank in the country. The first bank in the country was Bank of Hindustan. Okay. Similarly, if you talk about the first insurance company that was established in India, it was the Oriental Bank of Commerce. It means the B option. Okay. The Oriental Bank of Commerce was the company that was established first time in the country. Next, what is the minimum capital that is required to be established a life insurance company? If you want to establish a life insurance company, the minimum capital is required to be 100 crores. How much capital is required? 100 crore. Like in the banks, if you want to open a universal bank, you have to have 500 crore minimum capital. If you want to open a payment bank, you need 100 crore. About the ratio of insurance premium to the population is known as. Okay, so the ratio of insurance premium to the population is known as which of the following? A, B, C, or D? Is it penetration? Is it coverage? Is it density? Is it saturation? Which of the following is correct? So the right answer is, when it comes to the insurance premium you are calculating in the ratio of the population, it's the density. It's what? It's the density. So the right answer is C. So the ratio of insurance premium to the population is known as your insurance density. Okay. The next question is talking about the percentage of insurance premium received to GDP is known as what? So if insurance premium, you are calculating the ratio of population, it's the density. But when it comes to the insurance premium you are received in the form of GDP, that will be your penetration. It means the right answer is A, your penetration will be correct option. Okay, so do remember, if you are calculating ratio of population, ratio in form of population, that will be your density. Like how much insurance premium you have received in form of the ratio of the population, that is your density. But the percentage of insurance premium you received to the GDP, that is your penetration. So right answer is A. Next, read the following statement and choose the correct ones in relation to the concept of inflation. So there are three statements that talk about the insurance. Out of these three, you have to answer which of the following is correct one. So first is saying insurance can be defined as a contract between two parties where one is the insurer promises the other to indemnify or mark good or any financial loss suffered by the latter, that's the insured person, in consideration for an amount received by the way of discount. Second is saying the contract of insurance is referred to as the insurance policy. Losses cannot be determined beforehand but can be reimbursed if and when they occur through the insurance. Third, the insurance environment consists of insurance companies, insurance intermediaries, and the insurance regulator. That's the IRDA. So which of the following statement is correct? The third one is correct. Obviously, it is the regulator. The second one is also true. The contract between two parties of insurance is known as insurance policy. And the losses cannot be determined beforehand, but yes, it can be reimbursed after happening. The first one is not correct because by the in consideration for the amount received by way of discount is not true. By way of premium used to be the right. Hana, it should be premium. So the right answer is second and third are the only statement or the only option which is correct about the insurance. Okay, the second and third is the only correct one in context to the insurance. Insurance premium to your population, that's your density. Clear? So right answer is C. Now next question, on 2nd of September 2019, ADA issued notification effectively allowing dash percentage FDI in insurance intermediaries. So in case of insurance intermediaries, how much FDI percentage is allowed? So do remember, in case of insurance company and in case of insurance intermediaries, you have to remember two insurance FDI limit. Okay, so in case of insurance company, it is 74%, but in case of insurance intermediaries, it is 100%. Intermediaries means the agents. Okay, those parties who sell insurance policy as their third party products. They are known as insurance intermediaries. It can be individual agent, it can be a corporate agent. So the right answer here will be your B, 100% in the insurance intermediaries. Now, the key objective of ADA includes, what are the key objectives of ADA? First is saying promotion of competition so as to enhance customer satisfaction, increased customer choice and lower premiums. Third, also ensuring that the financial security of insurance market will be there. So what do you think, which of the following is the key objective of ADA? So ADA is the regulatory body of insurance market. So ADA Act, if we talk about, ADA Act came into existence in 1999 and ADA was established in the year 2000. Earlier it used to be known as Insurance Regulatory and Development Authority. Later its name have been changed into Insurance Regulatory and Development Authority of India. Okay, and the right answer is all of the above. And this was established on the recommendation of R.N. Malhotra Committee. Do remember the name of the committee because this is a very important committee in context of your insurance business. R.N. Malhotra Committee. Okay, right answer is D, all of the above. Okay, so these were the questions regarding your insurance company's unit number 26 of your IEIFS. Now, before moving forward, first let me know how many answers you have given correct here. Apart from that, also let me know if you have doubt in any kind of topic or any question we are discussing on a regular basis. So you can write a comment in the you can drop your question in the comment in the end of this video. Okay, if you are watching recording also, then you can share your questions or your queries in the session after dropping a message. So do let me know if you have any doubt. Apart from that, the resolution batch we have started this month only, in means in January. So the AFM classes started by Niharika ma'am on 10th of January. Okay, if I talk about your PPB, I started PPB from 16th of January. It means only one class we had till now. Sorry, not the two classes we had in this batch. And then IEIFS, I will be starting from your 6th of February. So if you are looking for a dedicated batch where your conceptual classes, your revision, your test, everything will be done, then this is the batch, the latest batch that have been launched. Okay, started from 10th of January. Apart from that, Mahapack is always there. Mahapack cover all the benefits of the individual batches. Additional benefits are also there in the Mahapack. That is, it will cover all the upcoming batches of your JIB. Plus, apart from this, it will also give you the mini and Maha marathons that will be different from the YouTube. So this is what we're talking about in the batches. This is the new batches we have launched recently. Apart from that, if you want to enroll in any of the batch, you have to first download the Adda 24/7 application. So first of all, if you know someone who is preparing for the JIB but they are looking for a bilingual classes, so let them know that the Shapat batch is for them. This is the bilingual batch. Now to enroll, first download the Adda 24/7 application. After downloading the application, what you have to do, one second. First, download the application. After downloading the application, you have to go to the home page of the application, and there you have to select the exam category. Okay, the exam category you have to select is JIB CIB. So let's say this is your website where you have to go. Here, so when you scroll down, you will find JIB CIB, the exam category. Then go to the JIB May 2024. When you go here, you can find that online classes are there. The test series is there, the video course is there, ebooks are there, and your JIB hard copy books are also there. Okay, all these books are available on the platform. Now, apart from that, you can see here, if you want to enroll in a batch, resolution batch, this is the batch. Click on the batch, do read all the offerings. Then check the study plan that is uploaded for the two subject of yours, because two subject is started right now. When you click on here, Hana, then you will find the study plan. Let's say, for example, this is your PPB's study plan. I started PPB from 16th of January. On 10th of January, I have taken the orientation class only. So you can see this is the study plan with the date, time, and module wise it is specified. Okay. Now, apart from that, after checking everything, if you want to enroll, just click on the buy now option. And if you use this code, you will get only 75% discount. So the user code Y496. Click on the apply. Once you apply, click, you will find 77% discount. But 1% additional discount will be available if you purchase from the application Adda 24/7. So you will get 78% discount here. Then continue and you are able to enroll in the batch. Okay, the same process you can use on the other batches also if you want to enroll in the other batch. Apart from that, one more information I want to give you all. Let's say I have selected here the exam category, that is JIB CIB. Okay, so you will find here the JIB readiness test. You will find here the JIB readiness test, and this is the JIB readiness test. So you can see exam readiness test PPB. So click on the register. When you click on the register, you have to log in your ID pass with your ID password, and then you have to click register now. Once you have clicked register now, it is free of cost registration. It is a free of cost test for all of you, and it's a all India mock test. It's what? It's a all India mock test. In all India mock test, you will be able to give the test for 2 hours, 100 questions, or sorry, 100 marks will be there, 120 minutes will be there, and the pattern of the questions will be same like in the main pattern of your paper in the JIB, like the kind of paper that IIBF actually makes. So the same is starting from 19th of January, and 19th of January in the evening from 6 p.m. It means from tomorrow 6 p.m. you will find that this test will be live for all of you. Okay, and you can go and join this particular batch, give this test. After giving the test, you will find also I will be coming up with the explanation of each and every questions of you. Okay, that will also be available for all of you on the YouTube, so that you will know how much ready you are for your preparation of the JIB paper, because the PPP paper was the toughest in the October 2023. A lot of bankers are worried about how to clear this subject, so you do not have to worry about it. This is the test that you have to give. After adding your credentials here, you will be able to find the test, and the test will be live from 19th of January. It will stay live till your 21st of January, so do not forget to give the test in between this duration. Okay, apart from that, uh, if you want more information about the same, you can ask in the comment section. I will check comment and answer you. Okay, so this is all for today. Thank you all for joining the session, and take care everyone, and I will see you tomorrow in the morning for the PPP session. And apart from that, do make sure you share the session with maximum people so that more and more people will know about this test as well as the practice questions. Okay, so thank you everyone. Take care. Have a good time. Bye bye.